Welcome back. In this video, we are going to learn how to catch these points using the Traders Dynamic Index, or the TDI in short. So sit back, relax, and learn something new. So the Traders Dynamic Index, or the TDI in short, is an indicator that can measure market volatility and sentiment at the same time. In this strategy, we will be using it as a governor in the market structure. So basically, we are going to be talking about the price action concept, but using the TDI for entry. It will provide us with pristine entry points. Let's see the strategy definition in the next slide. Before we go further, we have a free community. Check it out. I've put the link in the description box below. We share free signals, trading advice, as well as setups within that Telegram channel. So here's the strategy definition. The first thing that we need to do, or what we need to see, is break of market structure, which in short that I have written BOS. So break of market structure is basically breaking of the recent high or recent low depending on the market context. After the market breaks, we would see an impulsive move to the upside or to the downside. After that impulsive move, our interested point, or our point of market interest, is where is the market going to reverse to continue with the initial trend. So that point is where we will start to look for and confirm with the TDI indicator, is what I will explain just a few minutes later from now. Then this is all done on the H1 time frame. So we need to switch our market to the H1 time frame so that we see this particular move. So to simplify the definition, we are saying it's creation of high, break of that high, anticipation of the new low to make our entry. Then this is where we use the TDI to confirm our entry, and then we enter for the final move. So before we go any further, we are saying we only look to have 1, 2 lows or 1, 2 highs before we start to look for an ultimate reversal point. So it's 2 lows and 2 highs, and that cycle is done. So here's how you confirm using the TDI indicator. You actually need to see what we nickname a shark fin, or a piercing of the RSI line out of the bands. So basically, for those who haven't come across this indicator, these are volatility bands. They are actually derived from Bollinger Bands, and the green line is an RSI line. The yellow, we call it the moving 50, then the red one, the signal line. So what we'll be waiting for is to see the RSI line go out of the bands at the point of market interest. The point of market interest is the one that I've just illustrated earlier, where we are looking to create the high in the direction of the initial set trend. So let's now go over the charts to have examples of this particular strategy. So this is euro against dollar, and what I have on the bottom part is the TDI indicator, which has the same parameters as I have said. The lines are defined as what I have said earlier. So from this chart, we are now going to backtest to look for the points that we could have been taking our trades and see where the criteria is going to hold. From this point, actually from this zone, we can see that this was an ultimate reversal point. After location of this ultimate reversal point, or location of the highest price available for you, we start to look for break of market structure. So where did the market break structure? Breaking of structure in this particular instance is breaking of the recent low. We can see that this low was broken. Therefore, we had impulse, break of market structure, and a new impulse. So a new high was actually at this point. We had a high at this point. To anticipate the new higher low, we are actually trying to find a point where we had a shark fin on the TDI, or piercing of the RSI line out of the bands. In this case, we can see the line actually went out of the bands. After a line goes out of the bands, we start to look for a candlestick reversal pattern on the chart side. On this chart side, we can see that we had these I haven't memorized the names, but the shooting stars, the double toe, the railroad track, and so forth, all kinds of reversal patterns, candlesticks reversal patterns were issued at this point. Our entry was going to be made on your confirmation. In some other uses the 13 EMA to confirm, some other uses just the same colored candlestick to confirm. So in my case, I actually love to use the 13 EMA probably on the M15 time frame. So from this point, you can now switch to a lower time frame like the M15 for you to find the exact point of market entry. Only take 50 to 60 pips whenever you get an entry of this manner. Then moving forward, we can see that we had another ultimate reversal point that occurred at this zone. Then after that break of market structure, it actually occurred at this point, creation of a new high. And from this new high, we are looking to get into the market. And that is only confirmed with the TDI. This is where the market actually gave us a shark fin. And within that shark fin, that is where we make or we look for a candlestick reversal pattern. We had a railroad track at this point. We can see this railroad track where we have two candlesticks of almost the same length. Therefore, our entry was going to be at this zone, and our stop loss should be below structure, and then our take profit 50 pips. So you'll be looking to get at least 2:1 or 1:1.5 R, right? Then going forth, we can see another reversal point that was issued at this zone. Then after that, we had first high break of market structure, which is the most important part. Then after break of market structure, we were now looking for a new low. A new low was issued. How were we going to know that this is now the low? That is where the TDI comes into play. The TDI gave us shark fin, right, which is at this point. Then from that shark fin, we can see the market went away. So to purify this particular strategy, you'd need to know, at least if you can count levels, and if you at least know the timings and the sessions of the market, when the market makers hit stops and when the market makers induce traders to take positions and so forth. So if you have all that on your side, you have more odds of getting pure trades, unlike if you do not know. And we have that in our course, which is actually going for $99, simplified market maker method advanced course. On that note, we come to the end of this video. Thank you for watching. Like and subscribe.